Can a $100 trading account really be turned into $7,500? You have probably seen hundreds of screenshots showing small balances becoming thousands of dollars. But most people only show the final result. They never show the complete process. They do not explain why they selected a particular market, why they placed the trade, what strategy they used, or what happened when a candle moved against them. So today, I am going to show you everything. I will start this trading session with only $100, and my target is to grow it to $7,500. But we aren't using just one strategy. To survive a 75 times account growth, you have to adapt to the market in real time. Over the trading session, I am going to switch between price action reversals, high-speed RSI, momentum scalps, trend accelerations, and OTC algorithmic exploits. So watch every single second of this video because I am revealing the exact logic, chart setups, and risk management triggers behind every single execution. Let me show you how a professional compounds capital under extreme pressure. Okay guys, now we are back on the computer screen. You can see that the current balance in this account is exactly $100. And in this trading session, I am going to attempt an extremely aggressive challenge, turning this $100 balance into approximately $7,000 to $8,000. But I am not only going to show you the trade results, I will explain the reasoning behind every important entry, including the market trend, support and resistance levels, RSI confirmation, candle pressure, and entry timing. Watch this complete session until the end, because as the balance increases, the pressure will also become much bigger. You will see how I move from a $70 opening position to trades worth hundreds and eventually thousands of dollars. For our first trade, I am searching for a market that is moving in a clear upward or downward trend. As trending markets are useful because they give us a clearer picture of previous potential reaction levels, I do not want to begin the session on a completely random or sideways pair. Here, AUD/CADOTC looks suitable for the first setup. The market is moving in an upward direction, which means buyer pressure is currently stronger. Before entering, I am moving to the higher time frame and marking the important levels. I am using the 30-minute time frame to identify the main market structure. Higher time frame zones are generally more meaningful than random levels drawn from the 1-minute chart. I am marking the areas where price previously stopped, reversed, or created a strong reaction. Once these levels are ready, I will return to the 1-minute time frame and look for the exact entry. Remember this process. The higher time frame gives us the location, the lower time frame gives us the timing. Okay guys, I have now completed the important level marking on the 30-minute time frame. Let's return to the 1-minute chart and focus on the exact reaction. For this setup, I am keeping the position at $70 rather than placing the entire balance on one trade. However, this challenge remains extremely aggressive. The objective is to make decisions based on market structure rather than clicking randomly. We need patience, clear levels, and disciplined execution. Yeah, I am taking the $70 upward entry here because buyer pressure remains strong. The broader movement is still bullish, and the market has space available before reaching the next resistance zone. That uncompleted space gives us a continuation opportunity. Now watch the candle. It is moving upward and currently supporting our analysis. Only a few seconds remain. The candle is still holding above our entry, which shows that buyers remain active. And yes, the trade closes successfully in the upward direction. That gives us the first winning entry of the session. But do not focus only on the result. I am now seeing another opportunity on the same AUD/CADOTC market. This time, however, the direction has changed. The previous upward movement has now completed the gap toward resistance. Price is standing near the upper zone, and seller pressure is beginning to appear. So instead of taking another upward trade, I am preparing for a downward reaction. I have placed a $150 trade in the downward direction. The reason is that price has reached resistance after completing the previous bullish movement. This is an important lesson. The same pair can give an upward setup first and a downward setup immediately afterward. We should not remain emotionally attached to one direction. We trade what the current structure shows. The candle is still moving close to the resistance area. Even during the final seconds, the market can change direction quickly. And look at that reaction. The candle flips downward and forms an indecisive doji style close near the level. The trade closes successfully. The setup worked because the upward gap had already been completed and price reacted from resistance. That gives us two successful entries on AUD/CADOTC. Now let's move to another pair and look for a different type of setup. AED/CNYOTC looks interesting for our next trade. I am again marking the main support and resistance levels before entering. For this setup, I will also use the RSI indicator as additional confirmation. Those who have not watched my complete RSI strategy video should watch it after this session because I explain the settings and entry rules in detail there. But remember, RSI should not be used alone. We will combine it with support, resistance, candle wicks, and price action. That combination is much stronger than blindly entering whenever RSI touches a number. For this entry, I am selecting a $300 trade. Currently, RSI is around the middle area near 50. This means the market is neither deeply overbought nor deeply oversold. So RSI is not providing an extreme reversal signal. In this situation, price action becomes more important. I am checking whether the market is reacting from support and whether buyers are defending the lower zone. Now I can see a possible upward reaction. The market previously attempted to move lower, but it is meeting support. Several candles have created long lower wicks around this area. These lower wicks show that sellers pushed price downward, but buyers repeatedly entered and pushed it back up. That is evidence of buyer pressure near support. Because RSI is around the middle rather than extremely overbought, there is still room available for an upward move. So I have placed the $300 trade in the upward direction. The entry is based on a clear support zone, repeated lower wick rejection, buyer pressure, and RSI remaining away from the overbought extreme. Now let's wait for the result. The candle is holding above the support area, and buyers are continuing to defend the zone. And yes, the trade closes successfully. That gives us another winning setup, and the balance has now increased to approximately $600. I am staying on AED/CNYOTC, but I am not entering immediately. After multiple successful trades, overconfidence becomes one of the biggest dangers. We cannot assume that the next candle will also work simply because the previous trades won. So I am waiting for price to reach a suitable area. My condition is simple. If the market creates another green candle and approaches the marked resistance, I will look for a possible downward reaction. Until the setup becomes clear, I will avoid entering. The market has now moved upward and reached the resistance area. The previous green candles have already produced a strong bullish movement, but price is now meeting seller pressure near the higher time frame zone. So I have placed a $500 trade in the downward direction. The reason is not simply that green candles appeared. The complete setup includes back-to-back bullish candles, price reaching 30-minute resistance, reduced space for further upward movement, and sellers beginning to react from the upper zone. The current candle is long, which also tells us that the movement has already become stretched. That does not guarantee a reversal, but it strengthens the case for watching seller reaction. Now the market begins moving downward from resistance. And yes, the trade closes successfully. That gives us another clean resistance rejection result on AED to CNYOTC. We now have 4 major successful entries in the session. Let's search for the next setup. Okay, for our next trade, CAD/JPYOTC looks interesting. Before taking any trade, I am marking the important support area. The market has moved downward toward this zone, and RSI is also approaching the oversold region. This gives us a potential reversal setup. But remember, oversold does not mean price must rise immediately. The support level and candle reaction remain necessary. I have placed a $1,000 trade in the upward direction on CAD/JPYOTC. The market is positioned close to support, while RSI is near the 20 level. This means the downward movement has become stretched. At the same time, the historical support zone gives buyers a location from which they may react. So the trade is based on 2 main confirmations: support from price action, oversold momentum from RSI. Now we need the candle to hold the lower zone and begin recovering. The candle is reacting from support, and buyers are attempting to regain control. This is the behavior we wanted to see, and that's we get another clear win streak. Okay, I'm also seeing another upward opportunity on the same market. Several consecutive green candles are showing that buyers have become active after the support reaction. Based on this continuation pressure, I have placed another $1,750 upward trade. This is a very aggressive decision because the amounts are now much larger. It should not be copied simply because the first entry moved in our direction. The reason for this second position is that buyer momentum remains present after the support bounce. Now the market briefly moves upward, but the structure has not completely broken. We need to wait for the candle close. And yes, the market reacted in the final moments. Both entries closed successfully. The account balance has now moved to approximately $3,500. The important lesson is that support identified the reversal area, while RSI and subsequent green candles confirmed that buyer pressure had returned. Now let's move to the cryptocurrency section and search for another clean market. The account has grown significantly, so every new position carries much greater financial exposure. This is where a trader must become more selective, not more reckless. I am checking the higher time frame first and identifying the nearest resistance level in Avalanche OTC. The selected market is approaching an area where price previously reversed. I have placed a $3,000 trade in the downward direction. This is the largest trade of the session so far. The primary reason is the higher time frame resistance zone. Price has reached an area where sellers were previously active. In this setup, RSI is not giving a particularly clear extreme signal. That is why I'm relying more heavily on price action in the historical level. This is another important lesson. You do not need every indicator to agree perfectly. Sometimes price action gives the strongest information. However, an instant entry based only on a level is much riskier than waiting for a visible rejection candle. So viewers should treat this as an aggressive execution, not a guaranteed model to copy. Now let's watch how price reacts from the resistance. The market reacts from the marked level, supporting the downward idea. The balance is now close to the session target. At this stage, the biggest danger is overtrading. Many traders reach a strong profit and then continue entering until they give everything back. So I am preparing for one final setup. After this trade, the session will end. For the final position, I am selecting AED/CNYOTC and going for downward direction. The market has created 3 consecutive red candles, showing active seller momentum. There is also a visible gap between the current price and the lower support area. This suggests that the market may continue downward toward the next zone before producing a larger reversal. But we must also be careful. Entering after several red candles can be risky because the move may already be extended. So the trade depends on whether seller pressure continues and whether the market still has enough space before support. This is the last trade of the session. Regardless of the result, I will not continue trading after this position. The market is attempting to move downward, but the candle remains volatile. Only a few seconds are left. The current structure still shows seller pressure, and support remains below the market. Now we wait for the final candle close. 10 seconds remaining. The candle continues moving around the entry, but sellers regain control near the end. And yes, the trade closes successfully in the downward direction. That completes the session. The starting balance was $100, and the final balance has reached approximately $8,000. During this challenge, we used several different trading concepts: higher time frame support and resistance, buyer and seller momentum, and multi-time frame analysis. Although the strategies changed, the main process remained consistent. Find a structured market. Mark the important area. Understand whether buyers or sellers are stronger. Wait for price to approach the level. Then take the entry only when the setup becomes clear. However, understand the reality of this challenge. Turning $100 into $8,000 in one session requires extremely aggressive position sizing. Risking $70 from a $100 balance, followed by trades worth hundreds and thousands of dollars, is not conventional capital protection. A different candle result could have destroyed the account. So do not watch this video and focus only on the final balance. Focus on the analysis, how the levels were marked, how the market trend was identified, how RSI was combined with price action, and how candle pressure was interpreted. No strategy guarantees a win. No indicator predicts every candle, and one successful session does not prove that the same result can be repeated every day. Practice these setups on demo first and use a small, fixed percentage of your capital when trading with real money. I hope this complete session helped you understand how I analyze different market conditions and select my entries. Comment below and tell me which trade you want me to explain in a separate detailed video. The AUD/CAD trend and resistance setup. The AUD to CNY support and RSI setup. The Canadian dollar to Japanese yen oversold reversal, or the higher time frame avalanche OTC resistance trade. Also, subscribe to the channel because this trading strategy series is continuing. In the upcoming videos, I will explain each setup individually, including the exact rules, common mistakes, confirmation methods, and situations where you should avoid trading. You can also join our Telegram community using the link in the description for educational updates and future video announcements. Remember, do not chase guaranteed profits. Do not copy aggressive amounts, and trade only with money you can afford to lose. I will see you in the next video.